to this new edition of Market Simplified. I'm Milan, Vaishnav. We all had a very welcome relief rally today where Nifty rebounded close to 300 points. And the rally that we witnessed today may be due to some short covering and some fresh buying as well. And it was more anticipated because over the past couple of days' time, a strong bullish divergence of RSI was being observed. And there were some classical developments like an engulfing candle appearing near the key supports area. So the rally that we saw today was much anticipated and much on the expected lines. But having said that, there have been a couple of sectors who have had their phases of underperformance and outperformance vis-a-vis the Nifty. But Nifty Services Sector is one such sector which has not seen any major move, and largely it has been relatively underperforming the broader markets. Having said this, if we take a relative comparison chart or take a relative view of the performance of the Nifty Services Sector till date against Nifty, it has gone on to underperform the mainline, the frontline Nifty index, while Nifty has returned a negative returns of 11% on year-to-date basis. Nifty Services Sector Index have shown a negative returns of close to 15%. However, that being said, few signs on the technical charts are seen which says that the services sector may be in for some up move. It might have done with its phase of relative underperformance, and there are chances that we might see some good gains going ahead in this pocket. While taking a look at the placement of Nifty Services Sector on relative rotation graph, it is still inside. It is still inside the lagging quadrant. So, but if we examine the trajectory of the tail, we see that it is rising higher. So, despite being in the lagging quadrant, the relative momentum of Nifty Services Sector against the broader Nifty 500 index is improving. It might be a bit early to say, but right now this services sector is that services sector is in the process of completing its consolidation. It is in the process of finding a bottom. It is in the process of confirming a potential base at current levels. The moment Nifty Services Sector Index will move into the improving quadrant, the phase of relative underperformance of Nifty Services Sector would be over, and we might see that this sector may start relatively outperforming the broader markets. Having said that, let's take a look at the Nifty Services Sector daily chart. This is the daily chart of services sector, and we see that it has taken a classical double bottom support with the most immediate low just above 20,000. Apart from this, if you see that over the past couple of weeks, almost that is a quarter, it has formed a strong bullish divergence of RSI. I have also discussed this on a couple of earlier occasions that RSI is a lead indicator and it can also be subjected to a regular pattern analysis just like the stock price. So we see that RSI has developed a strong bullish divergence of against the price. So how do we spot a bullish divergence? That while the prices were making a lower low, this is the first bottom, this is the lower bottom, and this is the third bottom, RSI did not make any such bottom. It did not make any lower bottom, and this has resulted into RSI's bullish divergence against the price. So, taking a classical view, bullish divergence of lead indicators, primarily RSI, they have got a very high success ratio when it comes to marking a bottom, even though it is a temporary one. Apart from this, it is also accompanied by a serious double bottom support just above, just near 20,000 levels. So in a way that we can definitely say that unless this low point is violated, a potential bottom in this sector might have been formed. Let's try and remove the noise and move on to the weekly chart of Nifty Services Sector. Again, you can see how wonderfully the extended trend line has worked. This entire line extended itself, and the prices did find resistance around this level, and it saw some retracement. But again, just like the daily charts, a double bottom support also exists on the weekly chart. Now this makes this double bottom support more valid, more potent in a way, because it's fractal in nature. Fractal in nature means that it is there on the lower time frame charts, plus it is there on the higher time frame charts as well. Apart from this, the lower panel here shows the relative strength line of services sector against Nifty 500. So it has not only formed a base for itself, but it is also seen breaching above this falling trend line resistance. Again, I keep on mentioning that just like RSI, even RS line is subject to a regular pattern analysis. So we see that it has tried to take out this falling trend line resistance, and it is trying to move higher. It is expected that going ahead in over a couple of weeks, it is this RS line may move higher and may improve its relative performance against the broader Nifty 500 index. Now, it's a logical question that when I say that Nifty Services Sector Index might do some good, or might show some good performance, the most logical question would be that which stocks. So what I have done here is that I have plotted the entire. There are in total around 30 stocks in Nifty Services Sector Index. So I have plotted all of them here on relative rotation graph, and here I have made Nifty Services Sector as the benchmark, and we have tried to see the relative performance of all these stocks against the benchmark, that is the sector index. We see that all 30 stocks are all over the places. So they trying to analyze all of them in total might lead to some confusion, and it may not help much in selecting the good stocks. So what I've tried to do is that I went to the first top 10 constituents of this service sector index. We see that HDFC Bank, Infosys, ICICI and HDFC, these top four stocks make up close to 45% of the service sector index. So saying or making this sense in little simpler terms, or in different words, if the sector index has to perform, these top four constituents, which make up close to 45% of the index, it has to do good. Otherwise, the overall index may not perform. So it is quite obvious that if the chart of the sector index is promising, the top 4 or 5 components has to do good. It has to perform. So we will plot these 4 components on the RRG, plus other 4 more components which may not be among the top 4, but they are nicely placed on the relative rotation graph. The other 4 we took are HDFC Life, we took Kotak Bank, we took DMart, and one more we took was that of here it is, SBI Life. So all these 4 components are rotating northeast. The trajectory of the tail is very important here. So whenever a stock or a sector or any asset class plotted on the RRG is moving northeast, it is said to be improving its relative momentum and relative strength both against the broader markets. So shortlisting these 8 stocks, I feel that the service sector index overall in general, and these 8 stocks in particular, are likely to do well over the coming days. Now, taking a common sense approach, when I say that a relative momentum or against a particular of a stock against a particular benchmark is improving, it is it is very much a matter of great common sense that this should get reflected in the relative strength line of that stock as well against the broader markets. So we'll take a look one by one on this chart. The first one we see here is HDFC. Again, a classical double bottom support and a rising RS line. RS line is relative strength line. ICICI Bank here. It has a trend line pattern support and a rising trend line. This is Infosys. RS line has flattened and it has started to move higher. Maybe we can say that it has tried to take out this falling trend line resistance as well. SDFC Bank here finding a classical triple bottom support here and with a strong and rising RS line against the broader market. The other four stocks that we shortlisted were Kotak Bank, SDFC Life, DMart and SBI Life. Similar formation here. Stock prices are taking support at multiple pattern supports, rising RS line. The price is taking support at taking multiple support again in case of SBI Life, strong rising RS line, uptrending RS line. Similar thing in case of SDFC Life, price taking multiple support at the rising trend line. RS line is also in an uptrend. Same in the case with DMart. DMart is not so relatively strong, but it has just entered the improving quadrant. So maybe right now, moving on from now on, it might start relatively outperforming, because having just entered the improving quadrant, when a stock or a component enters the improving quadrant, it is interpreted as that the phase of relative underperformance for that particular stock or sector has come to an end, and a phase of relative outperformance might begin. So it might be a starting point for DMart. So shortlisting, going ahead for a medium to short term, we feel that these 8 stocks, SDFC, SDFC Bank, ICICI, Infosys, Kotak Bank, HDFC Life, DMart and SBI Life, these 8 stocks are likely to do well over the coming weeks. We can fairly take long positions here, and the stop loss may be the violation of the most immediate low point. If we take a long position at the current prices, at today's prices, all these 8 stocks have a potential upside of anywhere between 9 to 12% from the current levels. Whereas if we take the risk reward ratio and consider the immediate low point for these stocks, it offers a very good risk to reward ratio of almost 1:2.5. I repeat for the sake of everyone's noting it down: HDFC, ICICI Bank, Infosys, HDFC Bank, Kotak Bank, SBI Life, DMart and HDFC Life. These 8 stocks are likely to do well along with the Nifty Services Sector Index over the next coming days. From short to medium term perspective, that is from minimum of 4 weeks to 16 weeks, these are a very good additions to your equity portfolio, especially when the markets are volatile, especially when the markets are still within a very broad trading range. There are high degree of chances that these 8 stocks in particular and services sector in general might see some strong relative outperformance going ahead from here. This was all from me in this episode. I'll be back again with some good actionable ideas within short time. I feel that you all might have found this video interesting. If you have any comments, feel free to leave them here, either here, or you can reach out to me on Twitter. So by the time I return back, I would request you to like and subscribe to this channel. Stay tuned and stay subscribed until I am back. Thank you.